please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, welcome back. There's a 7-point cut on the Nifty. 10,764 is where we're at. And you've got, we were highlighting Manpasand, which is up 4%, which means from the day's low, it's up 7-8% or so. But it's still only getting to about 140 odd rupees or so. Well, let's time to hunt for value, as we are doing now for the last many days. Today we focus on the construction space. Anisha is here to tell us what stock we're talking about, and of course a 360-degree view which will help you understand if there is indeed value in the name. Anisha, over to you.
Overpromise and underdeliver. That has been the story of NBCC over the last few quarters, and the result is that the stock is now trading at its 52-week lows. Now, the financial performance of the company has been subpar and below analyst estimates, while the order book quickly swelled from 26,000 crores in FY16 to 80,000 crores in FY18. The dampener is that the revenue is really not coming in. The execution is actually a bit tepid. Now, while the order book grew at a pace of 47% CAGR over the last few years, the revenue growth has been a little tepid at around 17%. Actually, the downtrend also got triggered by a corruption case that was filed by CBI against the CMD of the company, Mr. Anup Mittal, last year. As a result, the management bandwidth got a bit diluted, and big projects like Pragati Maidan, Sarojini Nagar, now Roji Nagar got a bit delayed. Now, given all this, the analysts had to cut down the earnings estimates, but the valuation multiples, they remained a bit elevated at 45 times forward earnings, and that really made the stock vulnerable to a correction. But what are the triggers going forward then? Firstly, the management is hopeful that with a lot of large projects starting in Q4 FY18, revenues will start showing meaningful improvement from Q1 FY19 itself. In fact, they are banking on a 25% growth in Q1 of the year, while they expect that the growth will be faster in rest of the year, and hence a 30-35% growth expectation for FY19 as a whole, and even a faster number of 40 to 50% growth in FY20. Now, other than that, the chairman's corruption charges have already been resolved. He has been given by a clean sheet from the SBI. In fact, he's got an extension of 5 years as well. Now, further, the sentiment would be aided if the large orders that the company is working on, like Dharavi and Air India, will get executed a bit faster, and also if they tender the contracts at a faster pace. Now, in the analyst meet that happened just last week, they did say that they are looking to tender out 6,000 crore worth of project in FY19 itself. Now, what do brokerages make of this? 10 out of 13 brokerages actually have a buy call. 2 of them advise you to hold, while only 1 has a sell call. Now, the consensus target price is between 110 to 120, while the actual target range is right from 70 rupees to 158 rupees per share. Now, SBI, for example, believes that execution ramp-up is just around the corner, and hence they have a buy call on the stock with a target of 158, while Edelweiss believes that real estate monetization remains a key determinant. Hence, they are sitting on the sidelines, maintaining a hold call on the stock, while Ambit believes that execution pickup is still awaited, and the estimates that the analysts have still a large room for disappointment, and hence the sell call. Now, looking at the valuations then, it has cooled down definitely from the 45 times it was trading at earlier to 32 times FY19 and 22 times FY20. So the valuations have become reasonable, but it seems like the street is still waiting for a recovery in the revenues before betting big on this stock. But a standard disclaimer, this is not a recommendation at all, just a collection of facts for you to consider.
Okay, all right, Anisha, thanks very much for that. So NBCC currently at around 30 times as opposed to its historical PE of around over 40 odd times. Just want to point out CG Power, because that stock is at the high point of the day. Remember, it's a double upgrade that Citi has done for CG Power, all the way to a buy from a sell rating with a target price of 65. So you can see that optimism. But remember, that stock is still down around 40% on a year-to-date basis. Take a break, but up next we're going to be talking about the technicals. Mitesh Thakkar will be with us. Welcome back. Mitesh Thakkar is with us to talk about the technicals of the market. Mitesh, hi, over to you then. For the Nifty, we're just about consolidating today. What would the key levels be to watch out for, and your stocks as well?
Yeah, I think, good afternoon, Ekta. The Nifty might not do much, but the focus could be on the Bank Nifty given the fact that we have a weekly expiry today. As long as the Bank Nifty is about 26,420, 430 zones, I would maintain a mild positive bias and eventually hope that the Bank Nifty could be possibly slightly more upward trending towards the end of the session, and I'm looking at targets close to about 26,650, 700 to be achieved in a day or two. So the Bank Nifty, clearly the chart structure on the intraday basis is quite positive and therefore could enjoy a slightly better traction, and we have an event also coming up there. On the stock side, I have right now one sell and one buy. Kajaria Ceramics has broken a very key support of 515, so keep a stop at 517, look for target 485 on the downside. And Apollo Hospital, after a few days of rally, is giving a pullback in the last 2-3 sessions. So now it's come close to the moving averages and support area. So that's a buy with a stop at 1009 for targets of 1060.
Mitesh, we've got some questions now. We've got Bhaskar who's writing in. He's got 300 shares of IRB infrastructure. He's paid 230 rupees each for them. He wants to know whether, what he should be doing. And he's asking whether he should move to PFC after exiting IRB, if that is what you would recommend. Your advice, Mitesh?
Prashant, I think from the nature of it, he looks like a medium-term investor, basically looking to invest into stocks with a 12 to 24 months kind of perspective. IRB, in fact, has been range-bound between 200 to 270, not showing signs of a longer-term uptrend. So I think a shift could be a good idea. The stocks which I would possibly shortlist currently would be Reliance. I think that, I believe, after a few months of consolidation is ready to break out. In fact, possibly the breakout is happening right now. And Pharma News. I think very clearly on the medium-term charts, most of the pharma stocks have made a bottom. Maybe they will consolidate after a good rally in the last 2 weeks and drop by about 3 to 4%. But I think these are good levels to invest if you are looking at, again, a 12 to 18 month kind of perspective. And I think most of these stocks, especially Sun Pharma, Lupin, Dr. Reddy's, will at least give you 25 to about 30% kind of returns, or maybe even higher over the next 12 to 18 months.
Okay, well, we have another query. Dhaval Dave wants to know the future for Relcom and how long he can hold it for. We don't know what his acquisition price is.
See, nothing much is happening over there. When you get a news, I think you typically get a 4-5 rupee kind of movement, but I don't think the stock is showing any promise of getting beyond 22, 23 on the upside, maybe max 24, and on the downside, I think 10, 11 could happen again. So I again, this is a chart which after a big decline gave one bounce back, and I think it'll just be sideways in this 10 odd rupee range. So maybe you would want to buy it around lower levels, but typically I would still prefer going into quality stocks where the uptrends are, signals of uptrends are visible. At least they are safe, and you know that you can, possibly keep your money parked over there and sleep peacefully.
Okay, thanks very much, Mitesh. Appreciate you joining in with that. Devang Mehta is head of equity advisory at Centrum Wealth Management. He's with us right now on the show. Devang, thank you very much for your time. Appreciate you joining in. Let's just dive straight in with some of your top ideas, Devang, at this point in time, where you see absolute maximum upside. What would you list as the top 3 ideas?
Good morning, Prashant. Thanks for having me on the show. I think clearly we have been bullish on the themes which are sort of overriding the overall weakness in the broader markets. To specifically talk about certain sectors and certain themes, we are seeing that wherever earnings growth has been showing a bit of traction, as well as market is sort of betting on the premium plays, where sort of if your stocks are expensive but the results have been delivered, or the earnings have been flowing at a compounding pace, I think that's where you can put your money into. To highlight certain sectors, as I said, we are clearly bullish on a lot of auto stocks, passenger car vehicle stocks, and auto component stocks also, where we are seeing sort of the original equipment getting a good bit of sales, as well as the used demand also coming back. So this is one theme which we are playing. Another theme is the building material space. Again, the housing for all, or the low-cost housing theme, as well as infrastructure spending in the election year, will also boost a lot of demand for a lot of fast-moving electrical goods, or wires or cables, or all such type of demand, ancillary demand in terms of your paints or adhesives. All this find favor into the portfolio. I think if somebody plays more domestic themes rather than export-oriented themes at this point, it's more a safer approach, as well as a approach with a good night's sleep, where probably you can even make an 18-20% cool CAGR.
Oh, okay. What about FMCG stocks, if you're going with this domestic consumption thing? Too valued also?
Clearly, yeah.
Too highly valued?
Of course, yes, Ekta, they would sort of be overvalued always, and that's what the consumption power in India brings to the fore. So that's where we have seen healthy volume growth. A company like HUL also posting 11% volume growth. Again, not suggesting that to buy, but I think there has been some fabulous earnings growth post two events which were sort of disruptors, right from demonetization to the GST play, which played out eventually. I think we have seen good bit of traction and demand coming back, both from the rural side or also from the semi-urban side, and urban demand had always been strong in the last 1 or 2 years. So what we are seeing is this consumption demand into the FMCG stocks also coming back, and there are a lot of premiumized plays in Ayurveda where the market size is expanding. It's not that Patanjali has sort of disrupted the market, it's more of market size expanding. So what we are feeling is a lot of such ideas which are so-called expensive again will become a little more expensive in terms of the valuation, because they have been delivering constantly on their numbers, and as well as the margin expansion has also been a case with pricing power also coming to the fore in a lot of such companies.
Devang, just a quick follow-up. I know you can't talk stocks, but for Reliance Industries, the stock is at a fresh high. What do you think is, appeasing the market? Is it the telecom play, or is it oil and gas, or is it a consolidation of everything?
I think clearly the market is right now enthused with the type of numbers that the company has been exhibiting in the last couple of quarters, right from petchem business doing well, where they had done a lot of capex, and that is now showing a bit of color. Also the oil and gas space, or I can say, in fact, the GRMs, which has sort of shown around 11.5, 11.6%, being sort of record margins, has also played out very well. Plus the telecom business becoming operationally profitable and acquiring a lot of market share from the incumbents also excite the market participants. And I think the market has been clearly led by these 3-4 participants from Nifty, which has shown a great bit of strength and great bit of numbers also. Otherwise, the broader market has largely on the mid cap and small cap has been weak, but Nifty has been showing a lot of strength on the back of great sort of performance by Reliance and other stocks as well.
Devang, thanks very much. Appreciate you joining in, and good speaking with you on some of those themes there. Appreciate you coming on the show today. Okay, we will take a very quick break here. We'll come right back. We have a conversation lined up with Mr. G.K. Pillai, Managing Director and CEO of Walchand Nagar Industries, which is, slipping a little bit more actually, 16, 17 odd points, 10,754 is where we are at on the Nifty. We got the management of Walchand Nagar Industries joining in. Mr. G.K. Pillai is Managing Director and CEO of the company, and he's with us right now. We spoke with them towards the end of last month. Mr. Pillai, the reason we invited you over again today essentially is to just discuss not so much Walchand Nagar but the industry. There are these large defense orders for the private sector, forget, I'm saying private Indian companies, which have been in the works for a while now, but not seeing the day of the light of day. I mean, the landing platform docks, the missile orders, the diesel submarine program. Are we to kind of say that, well, all of this, we should stop talking about all of this and look forward to post-elections next year? Your sense?
Primarily what you say is very right, because we in the Indian defense industries, particularly in the private sector, has been very much enthused when the new government had come, that a lot of private sector industries will be having to supply to manufacture equipment for the defense sector. The initial 1 or 2 years, yes, there has been a slowdown, but then again we thought that there has been an upswing in it, but of late we find that still that upswing is just on the, it's not going up. And the latest 1 or 2 developments which has happened in the last 1 or 2 days, again giving priority to the Indian defense public sectors, I think that will really bring down the morale of many of the private sector industries who really had been thinking or have been already investing a lot for the defense sector.
Submarine the manufacturing, which now may go to the Mazgaon docks?
Well, that's what it says, that yes, it may go to Mazgaon dock, and Indian private sectors were ready to take up this challenge of manufacture of the submarines in India, and we have some of the Indian private sectors have also contributed a lot in the manufacture of the nuclear submarines. So I really feel a bit disillusioned with this decision which the government has taken. But I am sure perhaps the government may do a rethinking, because the Indian private sector has really geared up. Many of us have put a lot of investments for catering to the defense segment. And as I said earlier, one of the points of the defense industry or the defense segment is the gestation period is pretty large. We have to do a lot of investment, put a lot of people who are trained to manufacture the defense equipment. And if there is no regular visibility or inflow of orders, it is definitely going to have a setback for the private industries.
Okay. Mr. Pillai, what kind of visibility do you have for your order book?
Well, as far as our present order book is concerned for Walchand Nagar, just if I may say so, we have almost, we were primarily focusing earlier on the EPC segment, in which we have withdrawn. Rather, we are slowly withdrawing from the EPC segment. Our present order book is almost about 850 to 900 crores, of which defense and other manufacturing segment constitute to almost about 60%. And going ahead, we are intending to increase this segment to almost about 80% and only put 20% for the non-core manufacturing segment.
Okay. Can you break up what your international segment would look like and what the domestic segment would look like from this total 850 to 900 crores that you've spoken about?
Definitely. See, out of this, about 900 crores, almost about 300 crores is for the export business, a project which we are doing at Ethiopia, setting up of a large sugar and cogen power plant. So other than that, almost the remaining 600 crores is for the domestic segment. And majority of this 600 crores is in the manufacturing segment, catering mainly to the DNA. As I said, the Walchand Nagar's future or Walchand Nagar's DNA is to be only DNA, that is defense, nuclear and aerospace. So this 600 crores is primarily consisting of the DNA segment orders.
Just to go back to the industry, Mr. Pillai, so fine, I mean, new orders have to be stitched together. There is this sort of fight going on between two private parties for the landing platform dock order, so that will take time to finalize. But what about orders like the Akash missile and other missiles to a company like Bharat Electronics, which is a government company? I mean, that is all done, right? The advance has to be paid out for the work to start. So are we to understand? I mean, it's a problem of finances as well at this stage.
I don't think it's basically a problem of finance. As far as we are concerned, we and L&T are the two largest manufacturers of Section 4 and Section 5 for the Akash missiles. And we do get our orders from BDL. So I would like to really put it in record that BDL has been very good in terms of the cash flow management as far as the Akash missiles are concerned. The order visibility for Akash, though we were expecting a still larger visibility, which suddenly for some reason has not happened. But going forward, we are hopeful that the Akash missiles program which the government has put up with a lot of more enthusiasm, that I think will remain the mainstay both from the Air Force side as well as for the Army side. So we also have geared up, rather Walchand Nagar has geared up itself to manufacture almost about 25 such components, such sets for missiles every month.
Okay. All right, Mr. Pillai, we're going to leave it on that note. Thanks very much for joining in. Need to take a break, but keep your eye out on the market at the day's low for the Nifty. We'll be back in just a bit. Stay tuned.